Okay, guys, we're gonna look at pound JPY. It's Friday morning, so I'm just gonna scalp it, and the kettle's coming, which is brilliant because we all know Scruffy likes a coffee. So, what am I looking at first if I'm gonna scalp this thing? Well, the first thing I want to do is see what the strength situation is. Well, the pound is now greater than JP, and JP has lost a lot of ground. Pound's still losing ground, but not as much. So there has been a change in sentiment. So what I'm going to do is now I'm going to kind of quickly flick through and see what the bias is all about. Drop this out to monthly. Drop my indicators on. Drop that off. So I can see positive, positive, range, and a positive. Take this down into weekly. We can see negative, range, and neutral. Daily, come down. What have we got here? Well, we have negative, we have positive, negative, negative, positive, and negative. So it looks like it's still selling from the higher time frames. Take it into 4 hours. 4 hours is very simple. We are negative, positive, positive, and a neutral. Thank you, my love. Looking at this down through the frames, we are neutral, positive, neutral. So there isn't anything on the hourly. Take it into 15 minutes to see what we've got. Positive, neutral, and the positive, and then we take it down into 5 minutes. Now this is slightly different. It is positive, negative, positive. Okay, switch them off, don't need them no more. Drawings back on so we can see what's going on with this situation. Okay, so we have quite an odd situation here. We are selling on the higher trend. We are neutral. Well, it's a question mark, to be honest. It could be either way for the dominant direction. So the only thing we're left with is what's the now. We're looking at the anchor, and the anchor is a question mark, which is neutral. Right, okay, so it's a case of waiting. So I can't go to market yet, I just have to monitor it. It's a C, so it's risky. The trade is neutral, and, or I should say, neutral, yeah, neutral. So it could go either way. Okay. Right. So, what do you do in a situation like this? We know it's risky, so it could go either way. Want a low TP, so that's your maximum, so you only want about 10 pips. If I'm looking at this, I'm probably going to be looking to buy it because that's what's happening pretty much now. Okay, so let's drop this down, have a little look, see what the situation is. Okay, so probably down this region somewhere. I'm just going to pause this out. We're going to let this relax just a little bit. But what I'm going to do is I'm going to put this in for the squad, because what we do is kind of real time. Goes in the day trade, so we can see what's going on, and then we'll drop that in just there. Okay, Friday, don't advocate trading on a Friday, but at 10 to 9 they'll kind of know what the situation is. Now, what are the situation for us here? Well, let's just step this out a second so we can see what's going on. It's come up against this, it's pulled back, it's holding quite high, so the chances are it's going to be to the long side. Let me show you that. So I'm going to remove those blue markings. That is there. It's gone back to 50. It held. It came back. So this is what we're actually working against, which is this here. Just put these into place, just like so. There's your 50. Finally found it. It's holding above 50 is very, very important. And then what we do is this, nice and simple. That up there, here, and then back where it came from, and it's highlighting this level up here. So that's possibly where it's going if it gets through. All right, so quite happy with that. What about timings? Well, obviously this, just tie into that, see what the situation is there. Get a retracement on it. That up to there. 38. Kind of this zone here is where I want to probably start looking to get into this. So I'm just going to drop an order bang in the middle of that. But we're not going to go mental. We're going to be buying. For, put a basic target in to start with, just about here. So put it down at the bottom for now. That's double what we should be, which will give us plenty of room to watch it and get out if we need to. So all I'm going to do is I'm just going to leave that running, and I'll come back to you when it's done. Okay, boys and girls, we're going to kill this off. It's 60 quid. Bang. Get it out. Boom. Right, why have I done that? My sheet told me it was incredibly risky. Not only was it risky, it had a maximum of about 14 pips that it could go to. Now, the way I look at things is I want my target plus the spread, and that would have been around 14 pips what I've just closed. Now, there's a little tail coming in. If we drop it down into 5 minutes, see that little tail there? That could easily come back on itself, could easily go up to there, but I got my target. Now go through my routine. There's no positions left. I need to close that position off. So we've got one of the two orders into market, and then there you are, 60 quid. So that would have been 10 pips plus the extra 2 plus the spread. That's about 15 pips in total. I'm happy with that, and I was right to pull it out at this moment in time. So what's the moral of that scalp? Well, first of all, let's define what a scalp is. A scalp is in and out as quick as possible. Now, it's currently 10 past 9, so that entire trade took about 20 minutes, and it's give me 60 quid. All right, you're going to have those out there that are scoffing at that, but it's all in relation to how much was on it. It was a fiver. So that £5 investment has given me 60 quid because it was £5 a pip. Do you need a big account for £5 a pip? You can do it on £1,000 if you got the right leverage. If you got £5,000, it's a breeze. If it's 10,000, it's even easier. 20,000, drop in the ocean. So it's all in relation to the size of the account. Now, £5 on my account, it's not going to dent it, not in the slightest, you know. And I'm comfortable with that figure because if it gets out of hand, I quickly kill it and I can understand what it is that I'm looking at. Always stay inside your comfort zone. That's why a lot of people say you're so calm when you trade. It's because I planned it out and it's my job. If you're at your job and you're high pressure, you can be a fireman, you're still calm even though the pressure's on. And I was right to pull this out because there you are, it's turned right on the motion. So watching what you're doing, understanding what you're doing is paramount. But what was the most important element here? Was it the entry? Was it the setup? Any of that? No, none of it. And that's why most of you fail. You're looking for these wonderful setups, you know, and I can obliterate everything. You know, you talk about all the buzzwords. Oh, was it a liquidity point? You've got no idea whether it's got a liquidity point. Zero. Why? Because you can't see the orders. Even if you've got depth of market and direct market access, you've got no idea what's happening. So liquidity means nothing. It's support and resistance, an area of interest. That's all it is. So the jargon is just, you get caught in all of these buzzwords. It's an order block. No, it's not. It's support and resistance. Areas of interest. Always boil it to the simplest point of view. And the way I look at it is this, and it's what I tell the guys all the time. The market has three states. It's going up, it's going down, it's going nowhere. If it's going nowhere, leave it alone. If it's going up, fine, you're buying it. And if it's going down, you're selling it. That's as simple as it gets. Then put in some areas of interest. Decent support and resistance, if that's what you want to call it. I was always told areas of interest. But they're the same thing. Jargon. What are them? Look at key turning points of the market. If the market has turned heavily at an area before, there's a good reason. It's because people are interested at that price. It becomes value. And if it's value, people will either buy it, and if it's overvalued, people will sell it. And then it creates the turn in the market. So, of course, you want to be buying and selling in and around those areas. Common sense. But the most important part of the puzzle is not where to get in. It's not your setup, because you get in on the flick of a coin, and your setup can be simply pressing a button. To where you get out. That's what's important. Know where the stress points are. And the stress points are exactly the same as areas of interest. But if you're getting in on one, you're getting out on the other, or well before it. Why? Because it's a stress point and the market can decide to make a turn. And that's trading. So there you go. That was a quick scalp just to finish off the week and back up what I've been saying. And we'll see where this journey takes us. Kind of stepping back a bit from public life. If you request, I'll come to camera and I'll go on it. But otherwise, I want to spend a lot of my time traveling. And why not? So as always, guys, trade well, keep your risk managed. Above all, do what you love. The money will fall. See you all in the next one.